Despite the government's concentrated effort in easing both the monetary and fiscal policy, China has achieved no breakthrough in revising the economy. Uday Tharar, Goldfish Capital. Chinese central bankers worked hard to dispel concerns among the G20 finance ministers that it will not significantly devalue the yuan. With key manufacturing PMI data out tomorrow, how do you assess the Chinese economy at this stage?
China's economy is facing major headwinds of weaker demographics, high level of corporate debt, and deflationary pressures. Recent data suggests that despite the government's concentrated effort in easing both the monetary and fiscal policy, it has achieved no breakthrough in reviving the economy. China's real economic activity is still slipping based on our proprietary tools. Fixed asset investment growth is at a 15-year low. Railway freight turnover growth has remained in negative territory for 25 consecutive months. January exports fell by over 11%. So these real economic numbers are still decelerating at a steep pace, making it more difficult to believe the headline GDP growth numbers. Yuan still looks overvalued, and with concerns about yuan depreciating further, capital outflows will continue no matter how hard the government tries. While we keep seeing domestic monetary conditions improving with the PBOC cutting lending rates, I do not believe it will be enough. The weakness in industrial activity data will soon impact wage growth and hiring in China, and hence impacting consumer sentiment, which surprisingly has held reasonably well so far. I have been bearish on China for over a year now, and given the data that's coming out, will continue to be so.
South Korea's Finance Minister Yoon spoke of his faith in the Chinese leadership in being able to manage their economic slowdown responsibly to protect the emerging markets. How do you project the outlook for the emerging markets in the short term?
The short-term outlook for emerging markets does not look very promising. China contributes roughly 30% of emerging market GDP. With a bearish view on China, it's hard to have a very bullish view on emerging markets. Out of the large emerging markets I cover, there are hardly any positives. Philippines is the best macro story in emerging markets right now. It's growing at over 6%. It's got a current account surplus. Government deficits are well in control, and both inflation and policy rates are low. However, it has a small, illiquid, and an overbought equity market. India and Korea, on the other hand, fundamentally look relatively better compared to other emerging markets. India due to its strong domestic story, and Korea due to its low external vulnerability. However, downside risks for both have increased in recent months. Few export-dependent emerging markets like Thailand and Taiwan are suffering due to the slowdown in global trade. Other commodity-dependent emerging markets like Brazil, Russia, Indonesia, and South Africa are suffering due to the steep fall in commodity prices over the last year or so. Hence, looking at the emerging markets on a country-by-country basis, it's hard to find many positives.
Lastly for today, looking ahead through the week, what are some of the key indicators that you'll be watching out for that have the potential to shape the markets?
The first week of every month gets a lot of data releases. A host of countries in EM will release their inflation numbers, and will be interesting to see if the deflationary trend in emerging market continues. PMI data will be out for the large EM countries. Chinese PMI would again be the most important one, and I see it staying below the critical mark of 50 for the 7th consecutive month. Again from China, we will get the foreign reserves data on March 6th, which again would be interesting to track. The Indian budget was announced today, and would be interesting to see how the markets accept that, given the credibility of the government has gone down in recent months post the euphoria after Modi's elections. The Central Bank of Brazil will meet on March 2nd to decide on the policy rates. Consensus expects no policy rate changes. I will also watch out for the export numbers from Korea and Thailand, which gives a good lead indicator as to the export performance of EM in general. So net, we have an exciting week ahead in terms of data releases in emerging markets.
Thank you, Uday. Be sure to check back to see how these market movers develop throughout the week, as well as joining Monica Gibson for our wrap-up on Friday. See you next time.